Brigade Enterprises is the next one on our radar. The total sales value went up 60% year on year, but there is a decline that we've seen on a sequential basis, 25% decline in terms of the segments. Volumes for commercial and hospitality look strong, but there has been a dip in the residential business. Pavitra Shankar, who's the Executive Director at Brigade Enterprises, joins us now to talk about that. Pavitra, thanks a lot for joining in. Pleasure to have you on the channel. You had earlier said that you're looking at a 20 to 25% growth in FY23. Would you stick to that guidance?
Yes, overall, I think we're still quite bullish about the real estate sector. Our growth is generally based on new launches in the residential sector, which we're still feeling very positive about. So we do have pretty strong targets for this year, but we are working towards that for sure. On the commercial side as well, we have actually done some pretty good leasing numbers this year, and the team is very confident of meeting the targets for the rest of the financial year, plus 1 quarter or so maybe. But sort of the most heartening news is that for our hospitality sector, business has really looked up for the first time consistently over the last quarter or so. And therefore, we think that plus the improvement in retail, overall, all segments are doing very well for us in our business. And that's why we're very confident of doing well in the coming financial year.
So for the hospitality sector, you said that it's come back on track, and we're seeing it across the board, right? What kind of growth targets do you have, or what could the end of the year look like for hospitality, the volumes?
Yeah, I mean, currently the occupancies are definitely pre-COVID levels or very close to pre-COVID levels. The ARRs have also done very well. In fact, our ARRs and occupancies have seen like a 60% increase. So actually, we feel that in terms of AGOP, we have actually crossed 32 crores this quarter. And therefore, we are on track to beat the pre-COVID AGOP that we had, prior to the lockdown and the pandemic. We've also added 2 hotels during the past couple of years, so that will also be adding to our AGOP.
Pavitra, hi, good morning. No seasonality here, right? Some 60% growth, hospitality quarter on quarter.
Yeah, no season. I mean, the seasonality is there typically, around festival times, Christmas and so on. But a lot of our business that we've seen coming back has been due to travel, domestic travel. There's a lot of increase in the MICE business, which is meetings, conventions, exhibitions.
Got it.
So I think it is sustained beyond just, having celebrations and so on. I think corporate India is definitely back traveling. We've seen it ourselves. We are also back in travel, and we've seen a lot of our partners coming down to visit us internationally and domestically, just anecdotal. But I think that is what's happening across the board.
And so this is the segment you're most excited about. Where would margins be? I mean, segmental margins were 30% plus in the quarter. Could they trend higher?
I mean, we will definitely meet or aim to do higher than that. Right now, I think these are pretty good numbers and they're on the upswing. So yes, we are aiming for higher. 32% is pretty good, and we'll be aiming for pre-COVID levels in terms of margins also. Since a lot of hotels have done cost cutting during the past couple of years, we have all managed to work on much better margins, much better efficiencies in terms of staffing and operationally. So I think that actually bodes well for margins in the future.
Well, the street definitely likes what they're hearing, because the stock is up almost 6% right now on the back of the commentary. Pavitra, can you give us some numbers? Your collections in FY22 was about 4,000 crores. What is the figure that you're targeting in FY23?
So this quarter, we've done about 1,200 in collections, and 880 from that came from the residential segment, a little lower than what we saw last quarter. But I think what will happen during the remainder of the year is that we have a number of new launches coming up. We also have very good progress in terms of construction on the sites. So that will also contribute. For office and retail, the new lease up should also be contributing to the bottom line, and of course collections from the hotel business, which is improving. So we should be able to do better than last year, just because the overall portfolio is larger, and we are adding new launches as well on the residential front.
On lease rental, Pavitra, could you provide us with some outlook in terms of how things will go from here?
Yeah, so we've been discussing that in terms of our lease rental and vacancy in the lease rental portfolio. A lot of it was in the Brigade Tech Gardens portfolio, which I'm happy to say has experienced, 0.3 million square feet of new lease up in the last quarter. We've also pretty much substantially leased out our GIFT City project in Gujarat. So both these two were basically the main contributors for the 0.4 million square feet that we leased up in Q1. And there is good pipeline, about 1 million square feet in pipeline coming up. The team has got a target of leasing up within, the next 4 quarters. So they're very confident of, fully leasing the portfolio by then.
Okay, this is the most confident that you're sounding in a very long time, and I'm glad to hear that. Both your segments have picked up quite well. Is this a good time to be monetizing some of your assets? And if yes, anything in FY23 that you're looking at?
We've been having these monetization discussions all through COVID as well. And what I would say is at that point in time, we didn't feel like those were the right valuations. And I have to say that these were all unsolicited offers and bids for our assets. And if at that time we felt we were not getting the right valuation, I think even now it is, given the improvement on the hospitality outlook, I think we would still wait in order to see those returns sort of come in and then potentially, continue to remain open to looking for an equity partner who'd be there alongside us in growth of the hospitality portfolio. On the lease rental portfolio, I mean, we are always looking for partners to develop new assets with us. So, we are constantly on the search for capital partners as well.
Okay, so nothing in this calendar year that you're looking at. You're just going to hold on to it for now.
Yeah. I mean, it depends on how markets move and things like that. But we are confident of our assets and we don't see the need to really monetize because we feel like the future returns will not justify a hold in our valuation is what I want to clarify.
Okay, that's good to hear, and I think your shareholders will be happy as well. It's been an amazing stock performance, and business performance has been, of course, very, very good as well. Pavitra, great to have you with us here as always. Thank you very much for your time here
Thanks
on
so much
CNBC.
for having me.